Let's bring in our headliner today. He's Chris Toomey of Morgan Stanley Private Wealth Management. Joins us once again. Good to see you.
Nice to see you, Scott.
I was going to say, everybody sounds a little bulled up on the program today. Do you want to temper the enthusiasm with your own thoughts, or are you as bullish as they seem to be?
No, I think we're really cautious. The employment number, I think, threw everybody for a loop, but I think it's basically telling us what I think we all knew, which was while we've made significant progress in the fight against COVID, Delta has really delayed the opening. And as easy as it is to slow down the economy and flip a switch, to get the global supply chain going again and be operating at full capacity really is a little bit harder. And so despite everybody's hope and desire to get back to normal, if you're trying to get your kids to school and the buses aren't running, or you're trying to do any of the other things that you think in a new normal world, it's just being slowed down because of COVID. And I would make the point that, I think the last time I was here was sometime in mid-June. I think the 10-year was at around 1.57. The Fed had just come out and there was talk about tapering and this new hawkish tone. We're at about 1.6 right now. Mm-hmm. And I think, I was listening to Jim Cramer earlier today, and I think he's got it spot on in the sense that I think Powell is really concerned with what the reopening is going to look like. And so I could make the argument that, Mike is right about fire and ice, but it's going to be a little bit delayed, that this Delta virus is not necessarily gotten us through that early part of the recovery, and that a lot of that pent-up demand is still there, that there's a lot of extra capital sitting on balance sheets that's waiting to be deployed. And we haven't gotten that full kind of run up of that capital being put to work because of this slowdown with regards to Delta. So you throw all of that out, and I think this is a really difficult period. And I think investors really need to be cautious, just thinking about not only what's going on with the Fed, what's going on with the overall economy, but we haven't spent any time talking about what's going on with Washington. I think everybody took a deep breath with regards to a little bit about the debate around the debt ceiling, but that hasn't been solved. That's just been postponed.
Right.
We still haven't figured out infrastructure. We still haven't figured out Biden's marquee plan. And by the way, we're talking about Powell, but if you look at some of these predicting sites, his second term, which was trending around 90%, is going down to 60%. So you throw all of that in with China, and you throw that all in with some of the seasonality and the fact that we're about to go into earnings. We're dealing with Mike's cold scenario, and we're at basically a blackout with regards to buybacks. So all of those things, I think, lead us to be fairly cautious right now with regards to deploying capital. So we're not necessarily making any dramatic moves with regards to portfolios right now.